Well, good morning, Melissa. Happy Friday. How are you?
I am doing well. How are you?
I'm good. The week is almost over, so it's going to be a busy weekend with open houses and doing all the stuff realtors have to do.
Yes. Yeah, the weekend does not mean time off for real estate.
Ever, ever. So, hey, let's just jump right into this. I know that the Feds met last week and there was also some news this week. So, talk about, what's going on.
Yeah, so we had almost entirely good news this week. We had the producer price index numbers, which is kind of a leading indicator of inflation. Those came in lower, a little bit lower than expected. And then we had the CPI, consumer producer or price index, that came out Wednesday. That came in at 2.9 instead of 3, which was expected. So that was good. So that means that inflation is trending down painfully slowly, but it is. The one drag on that number is the shelter cost, which is rent, basically. But it's the owner's estimate of what they could rent something out for. So it's not really a real number, but that's the one, and it's a very big component. I think it's 45% of that number. So if that's high, it weights everything high. So hopefully that continues to trend down and we keep seeing progress there. But then we got kind of surprise data yesterday on retail sales. So retail sales came out stronger than expected, which was like a reversal. Like, okay, we're trending towards lower inflation and the economy's cooling off, but everybody keeps spending. So we saw a little bit of volatility in the rates yesterday. Volatility is short for rates going up. Um, but so up a tiny bit, but we're still basically at 6.5 for a conventional loan, which is so much better than we have been in a long time. Not as low as where anybody would like to be, a low place. But we're definitely trending in the right direction. FHA and VA are about 6.125 on a national average. Individual rates are of course going to be different, and they're programs sometimes that will get you a lower conventional rate than even that. So if you're thinking about buying, it's always good to talk to a lending great realtor who will connect you with a great lender and just find out where you are, what do numbers really look like. If you need to put a plan together, put a plan together based on reality and kind of where we're headed. And where we're headed, I think, is the Fed meets September 17th and 18th. And that's when we're expecting their first rate cut in a while. So it's either going to be a quarter point or half a point. We were kind of all looking forward to half a point until we got the retail numbers yesterday. And then we're like, oh, it might be a quarter point instead of a half. So I think realistically, if it's a quarter point, I don't really think we're going to see mortgage rates change probably at all, because we've already built in the assumption that rates are going to drop. The federal funds rates are going to drop a quarter. If it's a half, I think we might see a little bit more movement, but what I think is really going to happen is consumers are going to realize, oh, rates just dropped. It's
Yeah.
not the mortgage rate, but yes, federal
Yeah.
funds just dropped. They'll have credit cards and any sort of variable interest. And I suspect that that will cause a lot more buyers to get into the market. So that's kind of the outlook.
I was also got an alert that I think we've had I think the number was like 39% increase in buyers' mortgage applications recently. Was
Yeah,
it big? Okay.
we did. Yeah. So there are buyers that are jumping back in already. I think it's still a very good market for buyers and for sellers. And if I'm not mistaken, you just had a closing this week on a house that got 20 offers or something.
It was more than 20 offers. It was the craziest thing because, I have one home that is kind of like just hanging out, seeing what the markets could do. And we get a showing here and there. And then this home is like we put it on the market, and within an hour I was getting blasted with phone calls, and I had like 6 offers within the first few hours. And by Saturday, I mean, by the time we closed, I had a total of 20 offers in hand, 20 something offers in hand. And people were like, if it doesn't go through, call me, tell me, and it was this is a house I did not expect to sell that quickly, and we went well over asking price. We got well over asking price, so there's no rhyme or reason to anything, you know, it was priced very well. You know, she listened to me when we priced it instead of what she wanted to price it at, and I think that's what helped drive some of the activity.
Yeah.
It was great. It was, yeah, really good. Great for her. I was really happy for her because from the day we went on the market to closing, it was less than 2 weeks.
Wow. That is
Yeah,
fantastic.
yeah,
It was really good.
yeah.
So, yeah, and I think that just speaks to the market is different based on where in the Metroplex you're looking.
Yeah.
And in some areas, I think buyers can still get a good deal of seller credits to help with closing costs, buying down the rate, whatever it is that they need. Maybe they want some debt paid off and they're going to use some of their own cash to do that and use the seller's credit to cover their closing costs.
Right, right.
There's so many benefits to buying now that I don't think we'll have when we have more buyers in the market because inventory is still low historically, even though it doesn't look like it. If you look at like homes that are available for sale now compared to 2020, 2021, like it looks like there are a lot of homes for sale. And there are, but like you said earlier, it's a normal market.
Yeah.
This is what normal looks like.
Yeah. You know, and talking about sellers concessions, this weekend is the weekend that a lot of things change in the real estate industry.
Yes.
And I guess we would be remiss not to at least bring up what's what is happening and what this means to buyers and sellers.
Very true.
So basically, all it is, it started with in the MLS, we used to be able to have the buyer's agent commission listed in there. We no longer can do that. So the federal government stepped in and told us we had to remove. And so me as a heavy listing agent, I would negotiate the buyer's agent commission. So I would get paid and I would share that with the buyer's agent. That no longer is happening.
Okay.
So now buyers have to have the conversation with their agent ahead of time that, hey, the agent will say, hey, this is my commission. If the seller does not pay it, there are ways that we can build it into the offer so that I can get paid as the agent, or else you as the agent have to pay me, or you as the buyer have to pay me. So let's talk about that really quickly. It doesn't have to be high level. I mean, it can only, it doesn't have to be in detail, but I just want to make sure that we actually bring that up right now.
No, I think that that's excellent. And I will preface this by saying I think it is so important that when someone is buying a home, that they are represented by an agent, a professional who knows what they're doing, who understands the contract and understands the ways to protect a buyer. Because if you get stuck, I mean, best case, you might lose your earnest money, but the worst case could be so much worse than that. So that's my first point is having a buyer's agent is well worth whatever the cost is. And historically, that cost has been built into the purchase price paid by the seller. Going forward, I think it still will. It's just how it's negotiated is going to sometimes be a little bit different.
Right.
And then I'll just add that let's say you as a buyer absolutely love a house and the seller's not willing to pay 3%. Let's say that's what the buyer's agent's asking for, or what their fee is. Then there are other ways. Let's say the seller isn't willing to increase the purchase price to put it into the loan amount. We can also find, oftentimes, I would say usually, find ways to build it into the loan. We'll just restructure your loan so that you're bringing, maybe your loan to value goes from 80 to 82.5% loan to value. Maybe you're paying $15 of mortgage insurance per month. I think that's, if you love the house, that makes sense. If you don't love the house enough for that, then you go find another house where the seller's paying the full commission. So there are options. And I think there's been a lot of coverage in the media that has really scared people and made them think, oh, well, I should go directly to the seller or directly to the listing agent. But then you don't have anybody representing you.
Mhm.
And you lose so much by doing that. And I,
If you go on trial, most likely you're not going to represent yourself because you know, it's the same thing. This is your biggest asset. Now, I do want to say that I have currently five listings, three coming this week and then more coming in September. And every last one of them, I have had the conversation with my sellers to say, hey, here's what it means if you don't offer to pay the buyer's agent. And here's what it means if you do. And they all are just fine with, you know, having the buyer's agent negotiate their commission in the offer. They're fine with it.
I think it makes sense. I mean, it just, buyers struggle sometimes, especially first-time home buyers, they struggle to come up with the down payment and the closing costs. And then if they also have to come up with the buyer's agent compensation, they're just gonna go find another house. Because
Right.
it's not like we're 2020, 2021, where you get 50 offers on every house that's listed. I mean, we're just, yeah, if a seller wants as many eyeballs on the property and as many offers as possible, I think it makes sense for them to cover it.
Correct, correct. And so if anybody is wondering where they can find information, I think it's called the 2024 NAR settlement. So there's all kinds of information out there. A lot of misinformation on media.
Yes.
But if you have questions, you know, Melissa or I are always here to help you through it as well. Just it seems like it's a convoluted mess, but in reality, we're doing the same work. It's just different how the buyer's agent is getting paid. It's as simple as that.
Yeah.
It could be that it's status quo. We're gonna continue to do it. You know, the sellers will pay buyer's agent commission. It's just different how they're gonna pay it. That's it.
Yep. No, very true.
Yeah. So, okay. Anything else do we have to talk about? We talked about September. We know that that's gonna be a big day.
Yeah, I don't really think so. I mean, it's back to school. People have new routines and I think maybe a slightly busier late summer buying season than we've had in the past, just because of how high rates were earlier in the year.
Mhm, mhm. We saw the homes sales sitting so much longer than we have in the last several years. So, but I think things are starting to move now that we're getting more buyers out.
Yeah.
And what that means is more buyers equals more competition for buyers. So, you know, don't wait to see what happens in September because I mean, you'll have way more competition. And
Yeah.
that little bit of interest rate decrease that we're gonna see, you're gonna pay that much more in the value, the price of the home because buyers will drive up the price. I mean, that's just how the world works.
100%.
Yeah, yeah. Well, okay. Well, thank you so much, Melissa. This was short and sweet, but I think it was great information. You always
Yeah.
fill my cup with all this financial and what the feds are doing.
That's awesome. All right. Well, we'll chat again next week.
Okay, thanks. Have a great weekend.
See you.